Yo, yo, yo.
Hey, can you hear me?
I can. You hear me all right?
Yeah, you look good.
Thanks, man. Your PFP looks nice. The Giver, man, a mythical guest land. I wasn't sure I would ever get it. How are you, dude?
Honestly, last few days have been pretty tough. I'm
Markets,
just, I'm just,
personal, a little bit of everything.
I'm just recovering from clavicle getting brutally frame mugged by an ASU frat leader.
Oh, that was awesome. Dude, I'm fucking hyped, man. Let's go. Welcome to the stream. Okay, that was awesome. Can you give us like a quick intro into as much lore as you want to share? Like, who are you? I'm an avid reader, first time caller of the Substack. Who, like, what? Yeah, what's your lore as much as you want to share?
Sure, yeah, happy to. First of all, big fan. Um, humble to be on.
Hell
It's
yeah.
I really actually as a maybe I'll quickly share this as a note. I actually remember earlier this year, I think you made a pretty personal video about kind of taking a change in direction with your content.
Mhm.
And I really admired that at the time. Yeah, big props to you, man. I think you've been working really hard and you're just attacking every day. And I think that's wonderful.
Thanks, man. I appreciate that.
But yeah, maybe just share a little bit about myself. I wouldn't say I'm anyone special. I think it's by a lot of circumstance and a lot of luck that enough people care to hear what I have to say. But I ventured into crypto in 2021, kind of in the middle of the year. Didn't really know what I was doing, but through the wonderful land of DeFi, got pretty interested in rehypothecation, got really interested in NFTs. It was just like this wonderful, it was like this wonderful Wizard of Oz, like going down the rabbit hole, feeling like there was some mystique and magic to things. And that kind of hooked me for a little bit until I saw kind of the uglier part and the hubris involved with stuff like Luna and FTX. I would say just then I definitely wasn't a trader,
Okay.
hardly an investor, just 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 there. And didn't really get into crypto or markets seriously, I would say, until some point. I would say, yeah, maybe Q2 or Q3 2024. And yeah, it's been a ride since. I would say, my
Wow.
background is in finance.
Okay.
I did investment banking coming out of college and have worked across a few private equity firms, most recently at a mega fund, looking at kind of opportunistic special situation stuff. So yeah, I'll leave it there and open to questions.
You know, I don't do a lot of like no like real script here, so I'm just gonna go off what you just said. Is that
Sure.
feeling that 2021 feeling of this? I don't know what you said, like wizardry of every day. There's some new rabbit hole in NFTs and DeFi. And it was this. It's where I started in crypto as well. It was just this like wondrous, lustful feeling of crypto that was it was magical, and it went on for a long time, man. I mean, it went on all of 21, all of 22, 23 happened, and then it went on for a little bit in 24, like end of 24, and into probably Trump launch. But it definitely felt darker and grimier and scummier and scammier. And it almost feels also Trader Main's in here. Thanks for the sub, Trader Main. We love you. It almost feels like that is evaporated from crypto at whatever day, February 10th or some change, 2026. And it feels extra heightened because AI right now has this mystique about it where it's every day there's some new thing. And it feels like for the crypto participants, you are sort of like left naked and the tides come in and you're like left there stranded naked. Are you feeling this in AI right now? Like, do you feel like that magic has been ported over into another industry, or is this just like part of the crypto cycle and it's how it works?
I think I have a slightly different direction and how I see things. I think the conclusion is similar in that crypto and BTC as a result feels a bit more solved than it was back in maybe 2021. I think there's a few reasons for this. I mean, personally, I would say I've spent much more time looking at these assets in the last few years. So, compared to previous. So from that perspective, today's world is going to feel a lot more intuitive just as a result of kind of the time expended. I would say, broadly speaking, I think something that's really interesting with crypto markets, and again, this is away from kind of the point that you made in AI. I'm happy to jump back into that later though, which is that we kind of have, I'll put it this way. If you look at any market, any asset, kind of in its nascency, and you're kind of predicting or looking at this as kind of this hockey stick growth curve, like people call it a J curve,
Yeah.
pretty much anything could happen. Any stochastic event, anything random could happen during the early stage of an asset's life cycle, and the TAM or total addressable market can go up as a result from anything, right? But kind of as it matures and as it kind of enters that parabola, I think you kind of need a little bit more. And I think one really interesting part about the 2021 market versus today's market is that we kind of have a positive or the lack of a false positive, I'll put it that way, of what crypto looks like when there is a lot of liquidity in the system. And we kind of have this pocket in the last few years of what crypto looks like when it's quote unquote at a fuller scale and there isn't as much liquidity. So I think because of the precedents that we're able to observe, it does feel a little bit more solved. Again, maybe that's a kind of a personal item for me, where yeah, I think today BTC is mostly just an extension of certain macro tailwinds. I think it reprices really quickly when there's demand for it. Whether or not it's able to sustain that pump is probably a larger indication of maybe the health of markets or what themes are particularly interesting for people.
I like the solved framing, and I don't know if I'm interpreting it a different way than you are, but it feels like when I was around in 2021, I was super super early, and so I didn't have a great understanding of what was happening. But most of our narratives were around this. Crypto had a common enemy, right? Like we were fighting Gensler, and we were fighting the admin, and we were fighting institutional acceptance and adoption, and it was always like it's gonna happen, it's gonna happen. We're gonna get adopted. We're gonna get ETFs. And we kind of got everything you could ever imagine, you could ever want as like a crypto. I don't know if everyone would have wanted, but as a speculator, that's what you wanted. You wanted ETFs, and then Trump admin comes in and is like, "Fuck it, mine all the Bitcoin in America," right? Like he's just like everything you could ever want as just purely a price speculator. And then we get our blow off the top, if we want to call it that, at 126K,
Mhm.
and now we sit here at 67 and some change, and it's just like crypto feels like a little lost to me right now. Lack of narrative, lack of what's next. And so I guess to throw it back to you, and maybe you could take this wherever you want, set the stage a little bit, is like, what do you think has happened to crypto, but Bitcoin specifically, over the last couple months to get us where we are right now?
That's a loaded question.
I
I mean,
know it's a brutal one,
that's the
right?
gully, right?
The gully, the
The
gully.
gully, giver's gully. I, uh, I think I'll start high level in that I don't think that there's anything systematically wrong with Bitcoin, although it would be very fair for people to feel that way, given that it's down 50% in the span of 3 or 4 months. It's very natural to have that reaction. I would say the kind of the most primitive thought that grounds my assumption that nothing is wrong with crypto is that I think what we're experiencing is closer to the fatigue that kind of comes with, I don't know if recovery is the right word. I think the analogy that I would use here is, you're out with your boys, you're kind of trying to mog everyone in the club, SMV, chat fishing, etc. But but and you're having a great time. If you're drinking, maybe that's gonna make the night feel a little bit grander. Maybe, I certainly don't condone this, but maybe you're dabbling in some powder, taking some drugs. That might also help make the night go more smoothly, make it more fun. But the next day, right, whatever you put in your body, you kind of pulled forward some of the happiness
Mhm.
that you would have otherwise have had, and your body is just recovering it, whether it's sleeping, whether you're hungover. It's just, again, it's just recovery. It's your body telling you that there's an equilibrium state over the span of many days. Now if you look at it on a per day ratio, right? Why am I feeling so bad today? I didn't do anything bad today. All Everything that I did that was indulgent was yesterday. Well, then you might feel a little bit differently. But if you look at the grand scheme of things, I think generally speaking, whether it was conscious or not, you made a trade off, which is I'm going to have a really great night tonight at the expense of not feeling that great tomorrow and maybe not being as productive as I would want to be, or maybe falling off a little bit at work. And to me, I think that this captures the broader backdrop of something like Bitcoin, which is, I would say, since the BTC ETF, there have been some really explosive variables that have stimulated a lot of demand during this period of time to pull forward. Again, I'll use that word, to pull forward demand,
Yes.
right? So in the sense that, for example, it's like I think the treasury company is a great way to think about that. This, which is that a treasury company, I think, is they're a price. I've referred it to in the past as being a price agnostic buyer. They're unlike speculators such as myself or yourself,
Mhm.
who naturally, I think people get a little bit more excited when price goes up, and they get a little bit more pessimistic when price goes down. It's very natural. It's very human. But when you have something like, for example, like MicroStrategy, some of these other BTC ETFs or some of these other BTC Tcos that are just kind of happy to add wherever, regardless of where the lines are, right? They're not looking at the 200 weekly moving average. They're not looking at, although they might,
Tom
they
Lee
might,
is.
if
Tom
they're,
Lee
if
is.
they might be. Um, but the kind of point is that they're just kind of happy to bid, and their happiness to bid is directly proportional to how much money how much money is available, and how much money is available is then directly proportional to how much excitement that there is in the market. So naturally, they're going to be top buyers as a result. And what this means, again, in the grand scheme of things, likening this back to what I was saying earlier, is that when you have this kind of mix of im- agnostic buying, but also somewhat of impulsive buying, and these are, if again, if people are free to disagree, but if you view it as pulling forward demand that would have otherwise come naturally, right? So let's say on an average, I don't know what the actual average weekly inflow is for BTC
Mhm.
ETFs, but for the sake of example, let's say it's like 150 or 200 million. I think that number is incredibly off, so don't quote me on that. But let's just say that's like the average run rate if something like MicroStrategy did not exist. But that MicroStrategy does exist. So perhaps we're trained in finance, or to try to value future things
Yep.
at the present and try to ascribe a growth multiple or value for what that is today. What if MicroStrategy, for whatever quantum of funds that it's been able to deploy, whether it's 20 or 30 billion, what if that is kind of reflective of the next of what otherwise would have happened over the next 12 or 18 months on an organic level, but just hastened to have pushed BTC up so fast in the relatively short amount of time that it also went from 60K to 125K. I mean, I think that to me explains a little bit of the wonky demand, which is you know commodities like silver, right? They typically have, we typically think of these in boom bust cycles, which is that when price is a reflexive signal. So when it goes up, producers want to be producing more to fill in those gaps. And but there is like a time lag where maybe you know, your facilities are not fully ramped up
Mhm.
to get as much silver out of the ground as you otherwise would have been able to like if you had known that the price of silver was going to double, right? Maybe some facilities are maybe not economic unless the price of silver is at a certain amount. And then you ramp up these facilities, and then you get a lot of. By the way, this is no comment on silver. I'm using
Yeah,
this as an
yeah,
example,
yeah. I got you. I'm
right?
following.
But then you bring up a lot of supply, and then the demand for the good is actually less than it was a quarter ago
Yeah.
because price is lower. So people aren't, that reflexive loop is slowing down. And so I just think BTC has gone through a lot of these boom bust cycles that have gone kind of under notice and have been subtle, but they've all been, I would say, centered around this idea of kind of a panic bid or accelerating demand. And then the I guess, other than that, I would say, yeah, I mean, I think it's just, I think, for example, some of the price action that we've seen this previous week have just been kind of push pulls with where or the lack of excess liquidity in the system again compared to something like 2021.
The intro analogy, first of all, is the most understandable giver analogy maybe ever. So thank you for explaining it in collab terms. I actually haven't really heard the pulling demand forward thought process, but I think it makes a lot of sense when you think about what happened and why there is this just lack of demand. Is that it overextended and now we're like below mean essentially because
I mean,
we
I think Base 16 Z had an interesting tweet. I don't know if how much I agree with it, but it was something along the lines of you've had 18 months to think about your asset
yeah to
allocation.
allocate however you want and now everyone dies.
Yeah, but everyone has decided to sell now, and I think that is I think that captures the sentiment well, which is that I mean, if you just think about it at least as a singular theme, which is probably unfair, but
Mhm.
you know, in isolation, the run at hot trade has had a lot of months to percolate, and you know, consistent with kind of what you said earlier about if you decide to view 126K as this blow off top, some of the factors that had driven that took place in the last month were the Fed to resume its cutting cycle, the rush for inflationary assets, getting a little bit hotter in the U.S., and then a really, really, really possibly the most ever dovish prime minister
Uh-huh.
winning unexpectedly in Japan and promising a lot of fiscal stimulus. I mean, these are respectively the two biggest economies in the world.
It's
Whoops, sorry,
you
my
good?
earphone fell out. Can you hear me?
Yeah, you're good.
Sorry. But yeah, I was about to say like these are two very large economies, the largest from an equity and bond market respectively. And so you pretty much had these two countries. I mean, it's kind of similar to what Aiden Ross said about Solana about the top, which is like, hey, it's the Trump coin. Like what could be bigger than the Trump coin at Solana at $300? It's like what could be bigger than effectively the two largest economies telling everyone that they're about to run it extremely hot. And meanwhile, the US has actually been doing that iteratively over the last 6 months, not just September in isolation. So, I think if you look at it from that perspective, again, you don't have to, but if you decide to, BTC quote unquote blow off top kind of makes a little bit more sense from that regard. And I also think there were a lot of unique variables as well that probably contribute. Because you kind of need both sides of the story to make it work, right? Like I think lower demand by itself probably doesn't necessitate a 50K drop. I think there were probably some unique supply factors that contributed as well, like a lot of something that went really under noticed, I think, is that on October 10th, which is obviously D-Day for crypto, a lot of people attribute the fall to the sudden tariffs that were announced,
Mhm.
and I think that's appropriate to some extent. I would say that the removal of the tariffs a few weeks later didn't contribute to the same type of price action upward. So I think that loses a little bit of grace from that perspective. I think something I wanted to notice is that there was a memo that was shared on October 10th, effectively thinking about removing MicroStrategy away from the MSCI index as well.
Which
But
didn't
it was,
happen,
like I
right?
said, it hasn't happened. No, that decision is still on delay or deferral. But I think stuff like that, again, just I guess some of the really catastrophic price action on October 10th, looking back, for the 4-year cycle stuff, G quantum, I think there was a lot of stuff that kind of came in at once. And I would say, generally speaking, you don't get really explosive moves, right? Like 2 sigma, 3 sigma, 4 sigma, 5 sigma, I don't know. You don't get them without kind of this cauldron of many ingredients coming in at the same time, like you're cooking
Yeah.
a soup, right?
Yeah.
And so, yeah, I mean that's kind of how I view the last few months or weeks.
To the Aiden Ross analogy, which I mean, yeah, it's a looking back, it's one of the clips of all time. I don't know what adjective to throw before, but it's one of the clips of all time. Um, And you look at the macro conditions and you're like, how could it get bigger than what it was? How could it get bigger than what it was? Like where, yeah. Like what does that look like? Does everybody need to suffer first and markets need to just expand and take time to be in limbo for a little bit? Like to just follow up on that analogy, like how could it get bigger?
I think in an absolute sense, comparing to what it was in September or October, being larger than that, I think would be quite hard. I'm not an expert in plumbing, but that is my sense. So perhaps it's appropriate to think about BTC having a cap kind of there for now.
Okay.
Otherwise until being able to prove otherwise, of course. I would say though that I think there is reason for optimism because, like I said, I think if you follow this logic, it's a lot of the move starts making a little bit more sense, and in some ways that's good, some ways that's bad. I think in some ways that is good because it kind of maybe smoothens out the curve a little bit, and that there's nothing inherently wrong with Bitcoin. I think people tend to like these really, I don't know if it's extreme is the right word. I think
Okay.
people like to attribute really volatile price action to really exceptional events. I think it's this maybe some sort of heuristic
I
or
see.
easy way to connect the dots. Like something big happens, so something big happens, or something big must have also been as a result.
Like
When
price
in
pops,
reality,
so there
like
has to be a reason, sort of thinking.
exactly,
Got it.
exactly. And so, but like I think, like I said, I think it's just a small, I think it's an accumulation of a lot of small things kind of happening on the surface. Some of it was like complacent positioning. Some of it was, for example, like Trump's taco. I think that's a good one too, which is that for months, the market was groomed, it was cultivated to effectively ignore any and all policy decisions being made or explained through the White House,
Yep.
which is that, like I said, it's not unfair to think that if you look at like 8 months of backtesting at least, which is throughout these months, you could kind of expect that whatever the, Donald Trump or Scott Bissett said or says, the markets would just play higher. And so if, the problem is that I think you eventually get on this slippery slope, and I think that's kind of what happened in the last few weeks with Warsh in a sense as well, which is that again, I think people had this taco-ish mindset, and this isn't specific to crypto. This is across all risk assets, which is that I think people probably underappreciated the meaningfulness and the regime shift that it signaled.
Yeah.
Now, whether or not Warsh being bad for risk assets in practice, whether he'll actually be able to implement what he advertises is a completely different question. And I think that is probably, for me, the biggest theme for 2026 as it pertains to thinking about positive price action on Bitcoin.
Okay.
I think I think Bitcoin, for example, could easily reverse back to 80 to 90K in the next 6 months, as if there was a credible reason to believe that what has been marketed in the domain for Warsh is not actually coming to light, at least as quickly as markets think it is, or that it's just not happening at all. So that's kind of the barbell that I'm thinking about Bitcoin on.
God, 6 months. Oh my- Ah! Okay,
No, I'm just giving
so
a range. I'm just
to
giving a range. I wouldn't think so much about that.
to press on that then is like, what is your framework and thinking for the impact Warsh is going to have long tail on risk assets, and specifically Bitcoin, but you can cover whatever you want.
That's a good question. Maybe just for the viewers who are a little bit lighter on Kevin Warsh, I think maybe just to start off, I'll say that what makes Warsh unique, at least relative to exist like Powell, for example, and other Fed candidates that could have been chosen as the chairman, is that he has this really unique perspective where he's not hawkish in a traditional sense. At least actually, in the traditional sense, he would be categorized as dovish because he wants lower rates.
Yeah.
He does want, he's. I mean, again, like everything that I'm saying, by the way, is just off of his bibliography.
Yeah.
So
I got you.
whatever, whatever, back room deals that you think he has with Trump, I'll leave you to speculate on that. But in essence, he wants lower rates. He thinks that, however, um, the inability to have lower rates in the economy is because of the overly omnipotent weight that the Fed balance sheet has had in markets, in that it's bloated
Mhm.
and that it's actually crowding out the private sector's ability to compete because of all the excess money that is in the system. And so his ideology is that he wants lower rates. And the way to get to lower rates without creating inflation is by m- taking money out the system simultaneously. So
Mhm.
I think that's kind of the simplest way of explaining that. And that's, just a reference why that's bad for Bitcoin, just to kind of loop
Yeah.
things in there. Um, I think of, and I think other people would think of as well, that Bitcoin is like the sponge for excess dollars in the system. And so when there isn't anything, let's say, productive to do, and it's just sitting there and it's idle, then Bitcoin is a kind of a good capture, as it's like a sponge. And I think it's really interesting because Kevin Warsh has said himself that Bitcoin is useful as this barometer to understand how well he or the Fed is doing in guiding policy. Like he's
Yeah.
actually said pretty much, I guess he hasn't said this directly, but you can kind of infer if you read between two lines a little bit. He pretty much has said if Bitcoin is doing well, that means
We're
we're not doing our job
we're
well.
doing a bad job. Yeah. I think he said that
Yeah, we're doing a bad
directly
job.
on the interview.
I don't think he like. I don't think he said it as gruesomely as that,
Okay.
but yeah, I think it's pretty clear, um, and yeah, so I would say that that is like a really I think there's the way that I think about trading in general, and I'll liken this back here, is that there's always two sides to a move, which is and actually let's use a buyback as an example. Let's use
Yeah.
like the Athena coin buyback as an example.
Okay.
Back in when things are good, there's like kind of the reflexivity involved with the sticker shock, which is markets were pricing something more idle. Maybe there wasn't an event that was being priced in, and suddenly there's an event that's unexpected, and so people have to really quickly all come to a decision on what fair market value is, and that can be a really powerful driver for price discovery. And then there's actually the persistent impact of something like of whether there or not there's actual dollars coming in to buy in said asset, et cetera, et cetera. And I think here that's kind of the same principle is applied, which is I think because of stuff like Taco, because of stuff like, oh, like, Donnie wants markets to always be doing well. There is this probably like this notion that these chosen assets would be performing regardless of whatever was happening in the Fed. But I think people probably fail to appreciate just how impactful that this was because, we've effectively been in a system where, in an Apple reserve system, where, for example, like the bank reserves as a percentage of GDP has been pretty much, I think, over 10% in the last decade. And it's generally been an only going up number ever since 2008. So we have like you, me, your mom, my mom, everyone who's pretty much a finance professional under the age of something like 50, we've all lived in an era of pretty free money, of a lot of dollars coming into the system. And here's this guy, again, we don't know if he's credible or not, but here's this guy coming in saying he's going to do the exact reverse, right? I mean, that's going to have a pretty impactful, it's going to be pretty impactful on markets. So, maybe I'll leave it there for now.
On the you said a lot of things, but on the like I saw this tweet today, or maybe yesterday. I'm gonna not frame this as articulate as I should, but it basically was saying on the Trump chosen assets that you get this like feeling of diminishing returns that how long is Trump able to direct the mandate of heaven to make certain assets go up, and Bitcoin going down maybe is like a leading indicator that Trump's ability to say make the markets go up is less credible and loses power. Like, yeah, full post dilution as time goes on here. Like, do you think that that's something that is going to be attributed to equity markets and like the chosen Trump stocks as time goes on here?
That's a good question. I think so. Let's evaluate this under the assumption that midterms are going to go swimmingly and that there's no change in control
Yeah.
over the next over kind of like I guess the remaining Trump term. I would say that I would say that I don't think Bitcoin is. Yeah, I guess I'll be candid. I don't think that Trump really cares about cryptocurrencies and Bitcoin. Frankly, I think my sense is that he tried to leverage this voter base and it worked. And to be fair, he's fulfilled his promises of introducing an SBR. So I don't think he's been misleading. I think his perspective, and this is an entirely different can of worms, I guess, of slash Pandora's box. I mostly think like the lens that I view Trump in the last year, in the last decade, is I think what he really cares about today is I think he really does want to make America great again. I'll start with that.
Okay.
But I think his perspective of what a great America looks like is this kind of idyllic version where America is very self-sufficient in every domain. So I think a lot of the origin behind at least like the current Trump regime is his experience with COVID during the last term, where I think he probably felt like himself and then the US as a result, like quite powerless when all these kind of global supply chains got cut off.
Yes.
And it became just, remember earlier I said when you have an event happen and everyone has to kind of lock in on what
Mhm.
the fair market value of this asset is. I think that event happened for COVID where
Hmm.
everyone, like Trump especially, but a lot of people in his administration realized just how dependent the US economy had grown on China. Not just like global trade, but specifically China. And in this term, I think a lot of what he's been trying to do is effectively build up America. And, because America has, over the last, I'd say like 2 or 3 decades, has become a much more service focused economy versus maybe back in like the 1950s, 1960s, much more blue collar, right? Much more like,
Yeah, yeah,
the Rust Belt, all that stuff, you get what I'm saying.
yeah. Of course.
And over time, we like over this period of time, naturally, I think through factors like cost of labor, etc., a lot of that got ported over to China or developing countries. And I think Trump realized a little bit of the mistake. No, I wouldn't say mistake there, but just again how dependent
Yeah.
some industries in the U.S. had become on that as a result. And also, I think getting quite smart and having talked with some of these tech moguls or AI and understanding that this is a really powerful theme to get smart on in the next 5 or 10 years, that the bottleneck to the US becoming dominant in this, right? Because there's kind of the past, present, the future, which
Mhm.
is there's a bit of trying to rectify some of the moves that have been made in the past, but there's also trying to think about the future, which is if AI becomes this really, and it already is, but if it just continues to be this really intense trade, like what is actually the bottleneck? Like, is it labor? Is it expertise? And it's not. It's actually it's critical, it's critical minerals.
Yeah.
Stuff like cobalt, all this, stuff that produces semis, et cetera.
Mhm.
So I think everything that we've seen in the last 12 months have mostly been a push to getting up to speed in all these regards. So my sense is that this will continue because everything that we've seen so far does not entail that it would stop, right? Like even in like the really small stuff, like I remember like Liberation Day 2.0 back in July,
Huh?
when he was sending letters to all these Asian countries, or not just Asian countries, but just countries in
Uh,
general. There was like this trans-shipping clause of where it's like if you try to reroute your stuff through China, there's an extra 30% tariff. Right? There's small stuff like
yeah, yeah,
that
yeah.
that kind of has fed into the mix of, I guess, I just think that he just wants a really independent America. And I think if that's like a theme and you think that markets are mostly just a political utility, I think that theme continues to make sense to play out over his remaining regime. But
Okay,
again,
so
I was under the assumption that he's going to win midterms. So if you don't think that, then that's probably your main bogey.
let's assume yes for the sake of the conversation, and that brings me to. I mean, dude, it brings me the thesis or the narrative or the framing that I have heard more in the past 2 weeks than I've ever heard in my entire life, ever combined, which is this concept of bits to atoms. I don't, it's, crypto Twitter is funny because it's hard to tell. Are we early? Do we live in a bubble? Do we reflect the sentiment of the broader population? A little bit of all of the three, none of the three. I don't really know, but it feels like everyone everywhere is talking about the bits to atoms. And you look at the vehicles to express atoms, and it's basically just turbo bullish up only, right? Like I had a let's look at TSM chart today. It's like, oh my god, what have I been doing, right? Buying hyperliquid. And yeah, I guess my question is on the bits to atoms is how much gas is left on the trade and what is the best way to express it? Like, is this just going to be the theme of I'll add this. The thing that's like ironic about the bits to atoms is that it feels like we're enhancing or focusing on atoms to like for the purpose of bits to exist, like for AI and software to proliferate further, which makes it like a little bit confusing to fully wrap your head around. But yeah, how much gas is left on the atoms trade, and what is the best vehicle to express it?
Well, honestly, I don't think I have an answer for that. Yeah, I wouldn't say I'm smart enough in that domain to provide a coherent answer. I do have some broader thoughts on maybe the AI trade. Um,
Rip it.
I do think that I think the two areas of concern for me, right, which is like again, it's not a recommendation in either direction. I think my first concern is that I think we live like Twitter, for example, is a very chronically online space. And so I think what this means is that we have a very we are in a closed system
Yeah.
and what we read or see continually gets reinforced because it's a very small percentage of us. And so there is the danger that things that we think matter are not actually it never reached this Schelling point globally for it to actually be as impactful as we think it
This
is.
is a good
So
take.
I think that's kind of the first area of concern for me. I don't know whether that's true because you can also look at it the other way, right? Because there's two it can be symmetric, which is that we're so early to this mattering, and as a result, we're so early in this J curve because no one else has realized it that there's so much more room to go. So I think that is like the other side of the coin. Now, my second area of caution kind of answers that a little bit, the latter part of that a little bit, which is that if that was the case, would Nvidia be close to 10% of the S&P 500 today compared to a 5 years ago? Like today, I think it's like 11 or 12 times the size, which implicitly means that 5 years ago, the entire market had underestimated its impact by like more than 90%. in terms of the relevance that something like NVIDIA or AI would have to markets. So there's been a lot of growth in that domain. That's objective. Moving forward, I I think there's a bit of both, which is that I think the disruption for AI is meaningful.
Mhm.
I think that's probably a little bit undercredited. Just like basic stuff, just like how good stuff like Claude and
Yeah.
GPT have gotten in the span of months or years. I do think that probably not enough people have recognized this as it pertains to investable layers or stuff feeling under versus overpriced. Me personally, I don't know if I buy into that story. I think it's fairly priced. I'll put it like that. I think it's fair. I think it's fairly priced. Relative to the times that we're in. Um, I would say that again, like let's just use that go back to NVIDIA as an example. Like the entire AI department and industry as a percentage of the market, which is kind of this pseudo, really just a pseudo question of what percentage do you think it deserves relative to every other industry out there? I mean,
Yeah.
what is it like a quarter, like a third? Is that where it should be? I do think that owning the robot or owning the system is it's a little bit overshot in the foot. It doesn't mean that I can't rip higher, of course. But yeah, I guess I'll pause there.
I mean, this is the question, right? Is like figuring out. It's hard to do it on Twitter. I agree because you're dealing with a very controlled variable, if you will, where everyone shares similar, like I don't know, life day to day experiences, terminally online, probably more time online than not, and you're hyper exposed to these things. Therefore, you're extraordinarily sensitive to them. And then it's really hard to figure out, like, am I crazy or are they crazy or are we both crazy, right? And even within the terminally online crowd, there's that discussion, right? It's like this article. I don't know if you this is big or whatever article comes out the other day about AI.
Yeah, I read it this morning.
Yeah, you read this. It's 50. It's 50 fucking million views, and everyone's cut down the middle between this is insane. Stop what you're doing. Read this right now, or everyone's known this. Why is this a big deal? Why are people glorifying this AI slop, word slop salad article? And it's like, are we saying the same thing? Are we both in agreement? This is like the greatest thing ever. Like, what are we even fight? What is even the discussion? Where's the nuance? And then are we just desperately hoping that this thing is going to change the world, or is it actually going to happen? And to your point, we're so early that we can't even really think about how early we are yet. Um,
So I guess like no, what I would say like no commentary on markets or
yeah,
whether something are not fairly priced. This is just kind of a more qualitative point. I think that I think that that particular piece and just how we should be prepared for it is a little bit hyperbolic. I it kind of makes me feel like when everyone thought that kind of the Bluetooth headset and just like having something, that little clip around your ear would be really big
yeah,
because it kind of frees up your hands. It's super super convenient, but for one reason or the other, it never caught on. Obviously, that is not completely what is happening here, but I would say that like using the Moneyball quote, if he's a good pitcher, like why does he not hit good? I think AI is already at the point where it can easily replace very robotic functions. Okay. Like stuff like checking out your groceries, stuff like, I think the easiest to replace job in my mind of all of AI is something like an executive assistant.
hmm
That is just,
yeah. That's
Call
yeah,
I can do it. Right.
yeah.
Completely
Right
unneeded.
now,
Now, my experience with this, and it's, I could be skewed because I'm in the finance world, is that there is no replacement of EAs, of pretty executive assistants of pretty much any level across any industry that I've seen. And I think there's two things that are happening with the AI trade, which is the first thing that is happening is we are just on this quest of self-development and creation. I think, and rightfully so, I think scientists are really just trying to push the edge of what is possible. And a lot of resources are going into trying to test and see what the next frontier is, right? Which is like before it was can ChatGPT solve 6 plus 7, and now it's AI recursively writing code in of itself to fix itself and be self sufficient. So I think people are just very like innately curious onto seeing like what is possible, but the question of is this needed or does this have product market fit slash do people actually even care?
Yeah.
I don't know if that's a question that's actually been asked yet. So that's kind of one area of hesitation. And then the second thing, which is going back to the example I was illustrating earlier with the executive assistant, I think that there's a lot of industries where AI as something substitutive, as a pure replacement, it sounds really interesting in theory, just like the Bluetooth headset. But it underappreciates the importance of human connection as a role to play. In the sense that, for example, like again, EA's easily made redundant. I think the reason that they're still, employed, you could say because people are very reluctant to change, certainly possible. But I also think that like EAs aren't created by whether or not they're getting you the best coffees or writing the best emails or scheduling you the best meetings. It's just it's a layer of accountability and it's a layer of again, it's the human touch, which just makes everything a little bit better. And so that we're not all working in our own silos. Now, for the industries that are just working in their own silos because they've naturally progressed that way through stuff like, coding, program development, those industries are actually to me like much much more easily completely replaced through something like AI. And so I think that dichotomy is something more interesting to weigh in the next 5 years of, yeah, I guess summarizing it's like we
Yeah.
can but should we, and do people actually care?
Okay, I have like 4 points I want to make. Because that was
Sure.
awesome. Real quick, clarifying question: are you using OpenClaw or no?
I'm not using OpenClaw.
Okay, you have to. Okay, I would say like three things. I think the biggest question is, do people actually care? And I don't think anyone's actually stopped to ask this, and I think that is an important question. I'll say like two things. I think one is the thing I disagree with the most
Hmm.
is the human connection element having this
Hmm.
super, like having a moat, for lack of a better word. And I think one of the points I'll use to validate that is the remote work transition and the lack of returning to mean on it. And I think human connection element has been largely broken in the workforce, not by everybody, but by like an absorbent amount of the population has already like broken that social contract that this is something that they want. And they will just take convenience over connection unless absolutely forced to. And then one other thing I'll say, just as like not disputing, but just calling it out, that I've just as I'm thinking about this as you're discussing it, it's like this expectation creep humans have had with AI is insane. And so like I have this article pulled up. You read it, but it's like 2022 AI couldn't tell you 7 times 8 confidently, right? 2023 it could pass the bar. 24 it can write working software. 25 some of the best engineers in the world have handed over most of their coding to AI, and then February 5th, 2026, Opus 4.6 and Codex 5.3 launches, and maybe it's the greatest thing of all time. And it also brings me to like thinking about Waymos. Like I just moved from LA, and I guess they don't have them in New York, but on every corner of the street, there's more Waymos than there are Ubers. And to even think that that would exist 5 years ago, 7 years ago, is a mind blowing thought. And then Waymo goes in court, and they're like, yeah, maybe. Oh wait, you remove credibility because there's maybe some guy in the Philippines that's like directing some things or like made some turns on the Waymo virtually. But the fact that we've even gotten to that point is kind of mind blowing. And so I think that there has been this rapid expansion of AI expectation creep that by every step function of growth it makes, we're like, well, it actually can't do this crazy thing yet. Where in 2022 it couldn't fucking tell you 2 plus 2. And so I think that there's like I've noticed this in my own brain where I'm like, I told it to build, to transcribe your YouTube video and it's not perfect. Like, how did it mess this up? Read 1,000 of your tweets. Why is it not perfect? And I'm like, okay, let me take a step back and think about that. This wouldn't even be a thought that I could do this 6 months ago, let alone, right now. And I think that's worth calling out.
I agree, and it's not to say like earlier. Just to be clear, right? Like I think these. It's actually really. I have. This actually is a pretty interesting comment because I think the labor market in the entire existence of humankind actually has rewarded specialization more or less, right? Like as you get more senior, you get more specialized, you get more reps, you get more work experience. Your advisory is more prioritized as a result, right? Like if you're a lawyer, if you're an accountant, the more senior you are, the higher you can bill on a per hour basis. I mean, it's kind of the
Yeah, yeah.
a natural progression of how we think society should work. I actually think what's interesting that one of the more interesting points about AI being disruptive is that it potentially kind of fragments us a little bit in the sense that you can get these really, I mean, eventually, I think the goal is to probably have really specialized robots or technology
Uh-huh.
that can do these really either super menial or super redundant tasks. So, like I don't what's that like the Roomba? Is that the thing that
Yeah,
cleans
the
your
vacuum.
apartment?
Yeah,
Yeah, that's the self vacuum.
yeah, yeah.
So it's something like a more electric version of that,
Uh-huh.
or electric in the sense of
Yeah,
dynamic.
yeah.
Or, for example, like these really dangerous jobs that carry a really high risk of mortality, either in the present or health concerns in the future. Stuff like mining, for example,
Mhm.
stuff like fixing power lines in the sky, um,
That's a good one.
landscaping work. Like I think these are probably areas that AI fills as a niche, and it's something that actually like people would get quite excited about as
Mhm.
well.
Mhm.
Um, and so like I kind of think that I think, I mean, you're a good example of this, threat guy. Like I think just developing an overall competency and potentially maybe the labor market in the next 1, 2, or 3 decades, re- rewarding well-roundedness a little bit more than it used to. Being a generalist, just being able to agilely fit into what the market is saying that it needs, rather than a 50-year pursuit of one specific craft. I think that's kind of one of the more interesting markers of what's happening here. I think the second, again, I'll use you as an example, and this is something that I think Vicky mentioned in his stream last week,
Oh
is
yeah.
that there's been this, in the last 20 years, there's been this rush or this coming to terms with people converting social capital into financial capital.
Mhm.
And I somewhat think that I think having social capital probably in the next 1 or 2 decades becomes a lot more important as well.
Great.
Just because once everything gets so like once there's a layer of society that just becomes very commoditized, it therefore means that it's even harder to differentiate yourself versus your peers. Other than just pure metrics, such as money, and probably fame, therefore becomes an interesting variable as well.
This is I want to like lose a couple things I wanted to address, but Nikita Beer made this tweet and said prediction in less than 90 days, all channels that we thought were safe from spam and automation will be so flooded that they will no longer be usable in any functional sense. iMessage, phone calls, Gmail, and we'll have no way to stop it. It does feel like on the social capital point, at some point, whether it's 90 days, a year, 5 years, we like cross the chasm where you're sort of like locked in with what you have, Sort of like you've developed trust and this social web of people that know you and that we've met and we've talked and we've spoken and we have some sort of connection, or you haven't. And like, I don't even like say it in a doomer framing, but once you cross over just the flood, whatever it looks like, you're sort of locked in with what you have. And I think that social capital point is a really good one. I also think the generalist take is a good one as well. Like maybe I'm gonna extrapolate a couple layers here to make this analogy, but I've always said this in the relation of like the crypto market has sort of rewarded generalists as well, where crypto is so fascinating because any day, especially the further out you are on the risk curve, if you're trading memes, on-chain stuff, and then coins have more moats as you go up the ladder. And any day you could wake up and the business is just vamped, right? I think the earliest example I can think of is the Uniswap sushi swap thing, which they obviously lost, but you could just have this incredible product making all this money. You have a lot of the token, you feel good. The next day you wake up and a competitor forked your code, launched a one-to-one product, turned fees off, and now has a new token. And it's like, okay, cool, the business is gone. OpenSea Blur is a infamous one. Hyperliquid Lighter is another one. It gets crazier on the meme coin front, right? Which is like, okay, cool, you have this Moodang token, but the penguin's more viral now, so fuck your Moodang token. And I think that crypto traders by default have to be extremely agile, right? You almost never in crypto have gotten paid for delusional belief over a extended time period for one asset other than Bitcoin. And
Yeah,
the
I would agree.
way AI is moving right now and the way it's evolving things feels relatively similar, where the thing you get rewarded for the most is ability to pivot and being agile. Because it's like, fuck, I don't know, you wake up tomorrow, what's the new thing? What just dropped? Okay, cool. Salesforce has no moat anymore, or like Figma's down 90%. It's you kind of don't really know what you're gonna get hit with. And so I actually think it's a really good point that you made where it's sort of the generalist ability to flow through niche, focus, vertical is the most under appreciated skill set right now.
Yeah, I actually I would even sharpen that a little bit more. First of all, I agree with you. I think that was a really poignant take, but I would sharpen that even more in the sense that I think just I think it sounds really I think that's something that sounds really elegant and simple, but in reality, it's very hard to execute, especially if there's pressure,
Hell yeah.
simply
Hell yeah.
because and I'm not even like again, this isn't necessarily a take on financial aspect of like being a good trader because I'm certainly not. So I would never be able to speak to that. But at the end of the day, it's just about getting reps. Like to me, that's all it is. It's just getting reps, right? Like a salesperson will never be good if they don't just get on the phone and start building reps and and being okay with failure. And going back to I guess like the example that we were talking about earlier around being well rounded, I think that like structurally we have increasingly been in a society where I think people are just very afraid to fail because we have these and then it's changing. I would say
Mhm.
I've seen change take place in the last 5 or 10 years. But effectively, I think the route for a lot of people is, they're going to school, they're going to get a degree. There's this pathway to success that's been carved out for them by our previous generations, but by us, our previous generation, the generation before that. And so we often hit our 30s or 40s without having taken a lot of reps at lower stakes environments to be able to get comfortable with failure, such that you are 35 or 36, you have a wife, you have kids, right? There are people who you have dependents, the people who rely on you, right? Either financially or socially. It can be very challenging to take a significant career risk at that point if you've
Yeah.
never consciously made one
Good
before.
take.
It's very, very challenging, and so like my perspective, I think, is actually a bit different in this narrative that's going around that I've seen. I think Abby made a tweet today.
Mhm.
Abby Feldman made a tweet today about how, and actually even the X article that you that we're talking about, which is yes, like preservation of capital is is nice. It's important. However, AI is, if you believe in AI, though, AI is supposed to be really deflationary, which means that your purchasing power should be relatively intact,
Mhm.
because that's the first thing. So those two things are kind of against each other. But the second is that I think that the most important skill to develop as a young person, it is just doing adventurous new things and being and just having the courage to take that step, because I think just doing that alone really separates you Like even silly stuff like Cavicular, which we just talked about in the beginning of the stream. He's someone who's put himself out there and he's gotten vastly rewarded for it. And now that's not the perfect example, but I would say being okay with failure and grinding through that and having grit, I just think it's a skill set that people don't naturally get to build. And so if you can put yourself in an environment where you get better at that, you become more well-rounded as a result. I think that is probably the best defining trait to have in an ever-evolving society.
A sick take. I also love that you love Clav. It's so awesome. I love that you love him. I okay, I'm gonna do like a 180, and I'll let this be one of the last things I ask you. We're coming up an hour. I'll let you go in a minute, but it's kind of gonna be a loaded question, complete 180. But I want to get your take on it. Is
Sure.
that we, I think you have pretty good perspective on Bitcoin and where we're going. And I also think it's funny to one of your earlier takes. Anytime there's a sudden price move, people are desperate to validate via headline why did this thing happen. And I'm trying to just like stop with the what was 10, who blew up 1010. It's like, bro, it's fucking, it's February. Let's think about forward looking from here. But I think that basically what I'm saying, the path clear for Bitcoin is pretty obvious to me. I deeply believe in it. I think it has the mandate from heaven, and if you could exist long enough, you'll see $1 million Bitcoin one day. What is the future for the rest of crypto? Like everything else. This is hyperliquid. This is the perp dexes. This is the on-chain casinos, pump fund, Uniswap, and then this is everything else. The on-chain token, right? Like we have this equity token, labs overhang problem, and
Mhm.
whether it's that, whether it's liquidity in the system, whether it's Bitcoin underperformance or something else, basically no altcoin has shown an ability to survive any meaningful period of time and make a new all-time high over an extended period of time. And we're sort of stuck in no man's land. It's like, okay, cool. Is agentic stablecoins payments going to save us? Maybe. I don't know. Is more Moltbook like tokenized AI experiments going to save us? Maybe. Like, what happens to everything else in crypto that isn't Bitcoin?
I mean, I think the market is always right. So I think I'll start off with saying that I think many people have the idea that crypto cannot continue its current form. I would say I generally agree with that in the sense that, it's actually in a point we made earlier together is this question of, we used it for AI, but it's this question of what can we do? Like, what is the capacity for improvement versus the question of, do people actually care? And I think we've actually seen a case study of this in crypto in the last few decades, which or not decades, crazy, last few years, which is it's so sick that we have more blockchain space. It's so cool that we can run even higher
Yeah,
TPS.
more
It's
throughput.
so cool.
Yeah.
It's so cool. Um, but like I don't know if people necessarily care about the 17th L2,
Yeah.
and I think that the market has spoken as a result. I just think that, it's ever powerful in that regard. Now, when I say that, it's not to say that there is some short term, like to say that the market is always right on an every, on the minute tick on a day by day basis, but like zoom out, and I think we've already seen a lot of micro adjustments. I'll also put it this way: micro
Mhm.
adjustments happen in crypto, and I guess to guide the listener into what that timeline has looked like, which is to say that to start off, call it this cycle in where however you want to define it in, let's say, like 2023/2024.
Yep.
People, it was what was fresh and was carried over from the previous cycle was that people really enjoyed altcoins
Yeah.
and this notion
Yeah.
that we needed more blockchains and all these partnerships that came along with it. That was it felt as if that narrative had been dismantled unfairly by stuff like FTX and Luna, but there was no necessarily an inherent um there was no inherent there was no call to action yet necessarily on just whether or not people actually cared about blockchains. So that was just a continued effect from like an overhang from the previous cycle.
I like the
And then
take.
the market said, you know what, we actually don't care. We we've wisened up a little bit to these. I mean, it took a while.
Yeah.
And it
Yeah.
worked. I mean, it worked before the BTC ETF and like shortly after that, and it culminated in kind of this April peak. And then, over the next 6 to 10 months or whatever in the remainder of the year, these emissions kept coming, and there was just a lot of resistance because people still thought that alt season would kind of come back, and people had been really under allocated to BTC as a result of this. They're one step behind, right? They're of this previous notion. So then, obviously, as a result of positioning, perhaps like BTC appreciated as a result. And the main earlier I used this word micro adjustment, which is the way that people had responded to not wanting these really perfectly priced assets at FDV, where the bulk of the rewards were taken by the team, market makers, insiders, investors, was to kind of level set the playing field, or that was the narrative at least, via meme coins.
Yeah.
And so you had Pepe go to $1 billion plus in Q1 of 2024. You had ensuing meme coins that like Popcat and Whiff that kind of copy that model. And to me, that was all this really serrated response by markets and saying that we don't want your dog shit. Like, if we know it's dog shit,
Yeah.
we know that no one cares. So if that's the case, like, let's just make it so that everyone is starting at the same, or presumably at the same level. But then what happened as a result of that? Just like with DAOs, just like with TCOs, you might have an interesting idea, to start,
Yep.
but then greed and hedonism start playing in, and the derivatives that spawn as a result become lower and lower quality and more and more grifty, which ultimately culminated in, right, the Trump meme coin,
Yep.
Libra, all this extraction that took place. And so I do think that, and then moving forward from that, which was like, okay, meme coins are worthless. They cannot be self-sustaining. What do we care about as a result? Oh, it's revenue.
That's right.
It's
Yeah.
it's buybacks. It's
Yep.
stuff that can, right? So then we ended up having this 6 to 12 month TCO meta where everything had a TCO, or everything tried to have a TCO at least. And there was this focus on coins that could have some buying presence, and that was spurred a little bit by Hyperliquid and how well that did. But again, you have lower and lower quality ways of emulating that feeling, which culminated in just, you know, maybe buybacks not having as much buying power as it was initially thought
Yeah,
of.
or like
So I feel like
Barachain Dat at the end, right?
right, exactly. And so like I feel like we've kind of, everything that has spawned has kind of been an answer to the previous of what people cared or really actually did not care, and something ensuing has happened as a result, as a market response. So I do think that we've kind of run the block on rock paper scissors and all these manifestations. So moving forward, I'll liken it back to the hangover example that I used earlier, which is we probably have to, maybe we have to pay for our sins a little bit and how silly things got. But there will be a time because, as human nature, especially with something that is like a very visibly online asset that doesn't have friction in stuff like gold and silver,
Mhm.
I think crypto will always be interesting. I think it will always be interesting as an asset class, because people will always want to speculate. I actually think that people will want to speculate more in the next 20 years, and that's not necessarily like a hedonism thing.
Yeah, yeah.
Speculation can take a lot of different variations of that. Like, I think that generally speaking, my sense is like if you cull the bottom 20% of labor, for example, you now have a lot of dollars and a lot of people on the sidelines that are looking for new forms of speculation or entertainment. So whether it's something like the Beast games that, or all these game shows that you're seeing on
Yeah,
Netflix,
yeah, yeah.
or this higher stakes arena or some new game that gets formed and some combination of the sort, I think crypto is really well positioned to continue having innovative ways of speculating on that because of how, ubiquitously global it is. So, my sense is that it will continue to be interesting over the next decade.
I mean, I love the conclusion. Also, the how we got there was surprisingly articulate walkthrough. Like, yeah, you're right. Everything was just an answer to another, which nothing answers the underlying problem of no one really wants to buy these things, and leaves us where we are right now, the hangover, if you will. Giver, dude, it was awesome. We're at an hour and 15. I wasn't sure you were going to be able to stay with us this long, but yeah, I was looking forward to this one for a long time. I think you have some sick takes. Also, I'm kind of like not surprised, but you're tapped into the brain rot, like deep internet autist culture just as much as the high level, which is surprisingly impressive. Dude, I really appreciate you coming on. I think you're one of the smarter posters on the app in general. Sometimes a little bit too high level, but really impressive. The Substack's incredible, and yeah, man, I speak on the behalf of most people here that I'm grateful you put out the stuff that you do for free. I think it brings a lot of benefits to a lot of people, and I appreciate your time. I'm glad we finally got to do it. Is there any sign off, conclusion, anything you want to shill, anything you want to drop, anything you want to leave anyone with before you depart?
Yeah, I mean, I think, again, super, super thankful for the opportunity and big fan. I would say in the same vein that, we're keeping it pushing, I think using you as an example is nice here, which is I read this interesting post recently about luck times surface area,
Mm-hmm.
which is that generally speaking, people like getting excited about something. So if you are able to do something and to do something anything and to do it consistently, a community will naturally build around you. And there exists effectively you are something like X and something like what you're doing. You're increasing the surface area of what is available. That's kind of your social network. And so you are putting yourself in a position to get lucky because someone who's viewing you or someone who's reading my content might think, okay, this is interesting. Maybe I'll partner with this guy at some point. Maybe I'll do something with him. Maybe it's a friend. Maybe it's a romantic partner. You know, a future client, someone who wants to hire you. And I generally think that if you're consistent at something and you're passionate about something and you keep doing it with an air of authenticity, that feeling of depth of that relationship is only going to increase. And so I think that putting yourself out there is also symbiotically putting yourself in a position to get lucky. I think one of the things about life and just the notion of failure of what I mentioned in the past is that there are so many things that you have so many at bats on, just in almost every aspect of life. But most people don't take them, and they use these at bats instead for in hedonistic pursuits
Yeah.
sometimes, like stuff like gambling, for instance, like sports bets, when you can actually make a really meaningful change in your life. And again, today, where I think you're so early on that risk curve of taking a leap of faith that you can get just we can more or less get rewarded just by doing it. So shout out ThreadGuy.
Give me the truth, man. Lazy Villager 1. You're the truth, dude. I appreciate the love, and I really appreciate you coming on, man. You're awesome. Thank you for the time, dude.
Thanks, man. Appreciate it.
All
Appreciate
right,
you.
brother. Have a good one. Much love. Peace.
Bye.